Hey guys, and good evening. This is Simon with Trade and Perform Coaching, and wanted to do a trade review today. It was a really interesting day. We had a gap up, we had an open drive higher, and then we really consolidated up along the top of the white zone. And so I wanted to take a moment to kind of go through the psychology of what happens to traders. Let me close this up real quick. To what happens on a gap up and an open drive higher, how you can identify it quickly, right? And how you could use the white zone to help you A, target the market up, and B, understand what the components of the open drive higher are so that you can identify them next time. So the first thing that I want to talk about, first of all, this is for educational purposes only. Past performance is not indicative of future results. And I have two key rules when trading. Number one, don't blow up. Number two, do not draw down significantly. If you're losing money consistently, stop, examine what's wrong with your trading, right? And fix it, and then resume trading with real money if and when you can identify where your edge is, and an edge that'll consistently be able to pull out money. So let's jump into it. So first of all, today we came in and you can see that we gapped up. Now I want to show you a couple of things here. If you look on the profile of how we opened today, and let me remove this. Click. I'm going to try and keep this brief. So the first thing that you'll notice, see how the profile back in this area is big and thick, right? And see how you found lots of support resistance within this volume profile. The volume profile is cool because it tells us where the institutions are hiding out. How do you know the institutions are there? Institutions trade volume. Where the larger volume builds are, that's where the institutions are hiding. That's important because strategically, that is where they are going to come back to defend the market. When the market comes back to those locations, they're going to defend that position in an attempt, right, to they want the market to continue rolling in their direction. So when they spend a lot of effort defending in a particular area, and then the market moves away. When the market comes back, they're going to step back in at that same location a high percentage of the time, right? So conversely, when there is a very thin profile above, the market wants to come back and repair. So this is important. If you look last night, we gapped, right? And then we auctioned through overnight all the way through this thin profile. And you'll notice here, I want to draw this out so everyone can see it clearly. Let me grab my pen. Pause this. Okay, so I'm back. I now have my pen. So when you see how thin this profile is through here, okay, you'll notice that we have a volume build through here, right? And then we have a thin profile all the way through here. And you'll notice that we were able to push through this entirely thinned auctioned area, right? We've taken a pause in this area, and then you'll notice this evening we've gapped above, and we're actually trading at 24.72, which puts us right about this open gap, right? But you're going to notice that open gap, there's no volume build. It makes that open gap weaker. Doesn't mean it can't work, it just lowers the odds. And then you'll see behind, there's really nothing to push us through all the way through this day. So when I'm looking for a good support resistance, I'm looking for a big build in the volume profile, okay? And when I have a very thin profile, that's also important because I know I can push the market up and through that range pretty easily until I get to the next volume build, okay? So important. So that's the bigger picture coming into the day, right? Is that we had a pretty easy push up, and it's important to note, I want to show this. If you look on the downside, and I was really hoping for a gap down. I was hoping for a gap down for two reasons. First of all, there we go. First of all, I like gap downs because they give me an opportunity. The majority of the time, ES spends doing this U-turn, right? So if we could have gapped down, and we could have come down and repaired this area, or this area, those three locations on the chart. Actually, we did repair this area. I take it back on Friday. So really, it would have been, I stand corrected. This got taken out Friday and Thursday. So really it would have been either this area up here or this area down here would have been the two key areas I was looking for. But The primary reason is because I'm looking for this U-turn in ES. If you'll go back and I did this with the members in the room the other day, and you'll look back historically, this U-turn happens in ES a lot because of the institutional participation. It's massive. Majority of institutions have a long-only mandate where they have to keep 90% of their capital long. That's pension funds, mutual funds, and many hedge funds. Okay, so with that in mind, you always, if you have to lean on one side or the other, the short is nice, but the long is where the big money is. Okay, so now the next question is when we're trading within day, how do we manage that open drive higher, open drive lower? So I'm going to go to today's video really quick. Let's drag this over here, blow this up. There we go. And so let's go through the day here. So you'll notice first thing when we come in, I'm doing the market preview here. Let me jump through that. Okay, there we are. So you'll notice here's the open right here. Okay, so that's really the first 5 minutes of the day. And we start pushing through. So number one, when you go through this process, we have gap up, right? So the first question you ask is, do we get half gap? Do we get gap fill? And can we trade and close below the first 5 minute low? That's the most aggressive, right? And then the next thing we're looking for is 3 green up bars and NYSE tick, which is right here. We're looking to see if, and let me circle that for you. I'm looking to see if NYSE tick opens up greater than positive 800. So we had, right out of the gate in the first 5 minutes, we had those two components. 1420 tick, first 5 minute bar is green. Let's keep filling in the clues as we go through. And then when you'll look up and you're going to see that up around 2465 is the first white zone. So this is really, really important component in my trading, right? I already know on the chart, when I come in on the day, I already know where I want to trade, right? I'm not guessing, I'm not chasing, and I'm letting the market, huge philosophy I have, let the market come to you, know exactly where you're going to trade. You'll feel more relaxed, right? Occasionally you'll be stopped, but you'll feel more relaxed and you'll have a sense of control over what you're doing without having to read every single little tick in the market, right? So now continue watching through here. There's no reason to be short here. Notice also NQ is gapped over here. Second bar is pushing up. Again, we want to see, does it close below the first 5 minute low? Right? You can see the second 5 minute bar is green. Once we get the third bar, now that is exactly what an open drive higher looks like on a 5 minute chart. So I want to go back and do that for you here real quick. Okay, there's the open, bar 1, bar 2, bar 3. You now know that you have an open drive higher in ES. It's, as long as we hold that first 5 minute low now, which should not be penetrated up to this point, you're in trend day up. You see the very bottom of the white zone right here. This is our upside target. Okay, now this is the other thing that we're competing against. The market's already up 20, and the S&P in one 24 hours, one RTH session has a very difficult time pushing up more than 20 points. So I am not looking for a long, even though my target is up above, because the odds are that the market will become exhausted. If you gave 10 samples of this, when we're up 20, the market's going to roll and push down, whether it's a key location or not. It tends to not have the energy to be able to continue to push. So if you look when we're pushing now, normally I would not short an open drive higher, but because of the extension and because of that location, you'll see when I was in the room, what I'm doing here, if I can see it, so see that right there? I'm highlighting that that I'm looking for responsive sellers, that I want to place my short up in this white zone, really as soon as it touches or even a little bit before in that NVPOC, right? And watch as the market pushes up here. Now it takes a while, and notice, well, if you were in the room, you'd see we're totally relaxed. There's nothing for us to do. We're not trying to guess whether it's short or long. We're watching the market. We notice that it's, so you see right there how we just pushed right into that NVPOC and then into the white zone. See the rejection there? I'll show you that again. Push straight up into it. See there? And then rejection back down. So at this point right here, we're short. Now what becomes our target once we're short? So we know we had open drive higher, right? We're putting all the elements together. Open drive higher. We had potential for trend day up, but now we also know we're up 25 points on the day. Really hard for the market to push. And this is a key. I can't stress how important these white zones and yellow zones are. Key location. And now we're both in a key location, both in ES and in NQ, right? and then we push over. So everyone in the room at this point, as far as I know, this is where they're taking risk. I know this is certainly where I was taking risk. And now my goal is for a push to put, so from 24.6550 area, my goal is to push down towards 24.6350. Take my 2 points. In this point, in this particular market, I don't anticipate that we're going to roll down and that this is going to fail. The market was very strong today. So the primary target is 2 points and potential stretches down to 4. And the first thing I say is that, look, this trade could take 2 hours to work. But notice as the market's pushing through here on the day, look how strong that location is, where we literally found the location where the market stopped dead in its tracks, right? I want to show you that because it was never able to push out of the white zone. Right down here, we pushed down to 24.63 and a quarter from 24.6550. That's a 2-point rotation, right? And then if you'll watch as it pushes, now I left for lunch here after I got my initial trade. There's the next 2 points right there. See that right there where we hit again? That's the second rejection out of the white zone. And then finally, so I leave for lunch, and you're going to see finally we came back up and tested one more time. You can't see the chart there, but it's about to be moved over. You can see on the right here, it'll update. There we go. We finally came out. The chart didn't update. I left, and the chart wasn't updated on the recording. So now you have it, right? When you go back and look at this chart, you now know both NQ and ES were in sync. We had a very strong open over 1,000. That showed that buyers were in control. Again, I don't chase, and I certainly don't chase the market up 20. Right? So that's not a problem for me. I just immediately went to my checklist and my protocols. Up 20, I don't chase. I don't take the zero tick trade. There's no trade for me to take up 20 in the S&P 500 at all. Okay, I look for counter rotations back down, and then my only place for me to take a trade is out of this white zone. It's a short side trade. Push up into the white zone, and then push down out of the white zone. 2 locations to get your 2 points. Right? And then if you waited all afternoon, we finally got over here, and you were able to get from the 24.6550 all the way down to 24.6150. And man, you can't be more accurate than that. So the zones are working great. We're really having a great month of August, and it's been a great summer all the way through. So at any rate, last note before I jump off. Know what your open drives look like. Know what the psychology is behind the open drives. Big gaps tend not to fill the gap. Very important that you know that. And if we don't fill in the first hour, even lower odds. Number 2, maintain a journal, guys. Know what your feelings are and be able to balance your feelings versus what the facts are. Number 3, know where your key trade locations are. Those white zones are our bread and butter. And if you watch how I post these charts day after day, this is on a regular basis. You'll see that we get paid out of the white zone regularly, almost daily. So when you put those 3 components together, right? Emotion, location, strategy, right? And understanding of how the market operates, it becomes very easy to have consistent winners and pull money out of the market. If not on a daily basis, on a very, very regular basis with a very high percentage win rate. So anyways, my name is Simon. I'm with Trade and Perform Coaching. If you'd like to join us for a couple of days, email me at tradeandperform@gmail.com. If you're interested in having a high win rate and ending your boom bust cycle and getting consistent day in, day out, that's what I do. I bring traders from frustration to consistency. So anyways, I hope you had a great day. I hope you made a lot of money. Don't forget to keep it. Don't give it back. No cycle in the market lasts forever. You have to stay flexible. I'll talk to everyone in the morning. Trade your plan, guys. Have a good night.